let's look at Ethereum. Is it a buy or a sell? First off, read this disclaimer carefully. And do your good deed of the day by liking and subscribing. So here are the cryptos, and we will look at, one of the big boys, 106% from the 52-week low and the minus 46% pullback. So this is very, very deep into the bear market. So here is Ethereum's website, ethereum.org. Yeah, nice looking and informative. Yeah, you see that judging by the signs here, it is very much directed towards younger, investors. You could argue that maybe they should change it up a bit such that they can expand their reach. Because the key thing for the cryptocurrencies is for them to become what we call sticky, meaning they become anti-fragile, meaning it will be very difficult for any authority to take them away, to crush them. The US dollar, it is very powerful because it is very sticky. You have to use the US dollar for a bunch of stuff. Using the US dollar is also more convenient than the alternatives. So there's an incentive system for people to use it in transactions. The problem with Ethereum and the vast majority of cryptocurrencies is that there are incentives to invest in them as a speculation, but there are not sufficient amount of incentive to use it for transactions. But anyway, let's now jump into the charts here. So the thing is that we don't have any moving averages helping us at the moment. Indeed, we do actually have a bit of a villain. Let's actually just look at I think we can look at the daily data points for that, but there is resistance. Okay. Yeah, so let's just draw it in because there is the very real potentiality of us forming a shoulder, a head, and we could get a right shoulder. That is a head and shoulders pattern. It is a bearish technical pattern for all intents and purposes, but it is always possible for the neckline to become support. If we look here at, we can look at these indicators first, I guess. So here you have, the RSI and other, oversold, overbought indicators. Especially what is happening here with RSI and the 20-week PPO, which measures the distance from the 20-week moving average. It is pretty interesting at this point because the previous time we had this RSI level was back here. So let's zoom in. So that was here, a very similar RSI level, and the RSI was, it was pretty decent here as actually an indicator to put on a position. So this is where we had that low point of RSI that also formed the low here of price itself. And that's a key thing when looking at RSI. You want to see back in history whether it actually also formed low on the price. What about this price action? It is a bit further back. It is back here. So here we do see that the same level we have now on the RSI formed this very key low that led to a strong bounce, but eventually that completely fell apart. But there's been opportunities before with these current readings. So that is a bit of a potentially bullish point. Looking at the daily data here, data points. So the key resistance we have here, and the thing that the bears are very actively using, that is this purple 20-day moving average. Short, basically short and short. And that one has actually worked pretty well for the bears to short ever since this sell-off back here. Here the bulls were able to get above it a bit, but you see that there is quite a bit of pressure. The thing is that that moving average, the 20-day moving average, it was a good support level in the past. So I think that that's basically what happened here. Well, let's draw it in here. The bulls try to turn it into support again. So these moving averages, they are a very big deal, but they are very dynamic. So you will see that, the bulls try to turn a moving average to support, while the bears obviously want to make sure that it continues to be a resistance. And in terms of the 20-day moving average, it certainly is, the bears are in control at the moment, and they are very surgically putting on selling pressure. So it is a very good level for them at the moment. But we did see on the weekly data points that we are pretty darn oversold. So the type of bears that put on big positions here, they are very greedy, and they are the kind of bears that are more likely to get into trouble, similar to bulls that buy like crazy up here. Those are the ones that quickly can get into trouble. So let's now look at the daily data points here. Yeah, we are emerging from a very oversold level here. But there's been some bounce though. That's the thing. I do have a bit of a buy signal here on the MACD, but I think we need additional information here to determine whether we should be more bullish or bearish. Okay, so here's the seasonality. So maybe that can be a bit of an arbiter. So over the last 8 years, the seasonality for February, March, and April, the months that are most relevant to us at the moment, definitively some pretty darn good seasonality here. So the seasonality is definitively bullish. We do see that in terms of more bearish seasonality, it really starts here, heading towards September. So from May to September, we do see a weakening, but looking at the seasonality from January to April, that is bullish, especially April. So the seasonality here is definitively interesting. When we look here at the correlations, we do see that Ethereum has 93% correlation with the S&P 500, 42% with the gold, 67% with the ARK Innovation ETF, and minus 47% with the dollar index. Daily data points: 59% with the SPY, 22% with gold, 54% with ARK K, and 4-ish% with the dollar index. Okay, so what is a bit problematic in terms of correlations here for Ethereum is that you see here that it is more correlated with risk assets than safe havens. Gold is viewed as a safe haven investment. It's where people go to in times of crisis. So based purely on correlations here, Ethereum is not being treated as what many think it is. The argument for Bitcoin and Ethereum and other cryptos is that they are like a hedge against weakness in like the classical markets, like the stock market, the fiat currency market, or even the bond market. The correlation here is pretty clear and very factual. It is treated as a risk on instrument. I think that we could let's just quickly look here at Bitcoin, just because it is the biggest. Bitcoin, it is going to have a big effect on Ethereum, and we see a very similar pattern here with the Bitcoin. If we go here to the daily data points, yes, we see the purple 20-day moving average is this very clear level that the bears use to short, meaning to go bearish, betting against and profiting from a decline in the price. What is, however, interesting with Bitcoin, a bit more clearly than what we have with Ethereum, I would argue, is that there is a potential cluster of support here in this yellow zone that I have drawn in. So approximately around there, there's a bunch of horizontal support levels that could work. It's pretty obvious though that for quite some time, so let's actually measure how long this has been going on. So for a whopping amount of 399 days, this region has attracted buyers. It just has. You see that back during this sell-off here. We saw buyers at this region during this pullback as well. So it begs the question whether we could actually get a bit of a bounce, which later could develop into a more longer term bottom for Bitcoin, which would be also bullish for Ethereum. So to sum up my take here, I think that both Ethereum here and also Bitcoin, they are at interesting levels. We have seen a pretty protracted sell-off. The key issue is that 20-day moving average, where the bears are very surgically able to just smack down the bulls every time they try to get above it. So I think that's a very clear level to watch going forward. We do have this horizontal support level, very strong seasonality, so I do think that there's more reasons to look for bullish opportunities than bearish. But we would really expect the 20-day moving average to be able to be broken though by the bulls, because it is a declining moving average, and that you have this on the one hand, you have support, and then you have that the supposedly weaker resistance level. So the bulls really don't have any excuse not to succeed here. And if the bulls are not able to use that to get some confidence now and really just push through that resistance level, then that will be interpreted as very bearish. So it is very critical now for the bulls to act, because the support level we are at, that is what is keeping the bears from putting on huge short positions, and it is also what is preventing current bulls from not just panic selling. So the split second those support levels are broken, that is when you can get that self-reinforcing sell-off. So yeah, exciting times ahead for Ethereum and Bitcoin.